So yes, the upside if I trade a big size would be that I could make back the loss quickly. The downside, though, isn't just that I would lose more money, it's that I would lose more confidence. And when you start losing more confidence, that's when things start to get really bad. So my confidence on Friday was obviously shaken a bit, but I think if I can self-correct quickly here by not letting that spiral into multiple red days, that I'll be back on track pretty quickly. All right, so that gives you a summary of kind of my approach going into Monday morning. Now, on Friday, we did have YJ, which ended up making a big move from $2 to $14 a share, and then it came all the way back down to $2.74. So in terms of percentage return, this did go up over 1,000% on Friday. What's the catalyst? There was none. It was a Chinese stock with no news. All right. And it traded on how many shares of volume? 51 million shares of volume. Now, in hindsight, if I had stuck around on Friday, could I have bought, $100,000 worth at 2 and, sold it on the way up to, well, whatever? Technically, yes. Would that have been a good idea? No, it would have been very risky. And you can see how this started on lighter volume. Yes, the volume increased, but lighter volume with back-to-back halts definitely makes it harder to manage risk, and you can get caught in a halt going the wrong way, and suddenly you're in too high and you're down 40-50% on a position. So I didn't take any trades on that, but this is another example of a Chinese stock with no news making a big move.